before the break, we brought you Nationwide's latest report on house prices. Rish, you have more on that now.
Now it showed a surprise fall in house prices, the first actually that we've seen since April of last year, and it was a substantial monthly drop as well. 1%. Is it a blip? Is it a new trend? We're going to get the breakdown now from the Building Society's chief economist. He's Martin Gahbauer. Martin, thanks for joining us. Well, is it a blip, or is it going to be forming a new trend?
Well, at this point, I think it's still difficult to make out what the underlying trend is, because we had two factors around the turn of the year that may potentially be distorting the figures. For one, we had the expiry of the stamp duty holiday, and then secondly, the bad weather in January, which disrupted house viewing. So what we saw was a big drop in house purchase activity in January that appears to have fed through into prices in February. Now, we still don't know whether activity will come back to the levels we saw before Christmas quickly. If that's the case, then it may just be a blip. But if there has been an underlying fall in house sales, then it may be a bit more than that.
But underlying the problem, Martin, surely has been a lack of supply. Have we seen any improvement in that?
We haven't seen a huge amount of new property coming onto the market. The evidence from surveys is that the flow of new property onto the market is a bit better than it was around the summer of last year, for example, when there was an extreme shortage. But the level of excess stock is not very high still at the moment. So I think the drop in prices in February is very much a demand-side story rather than a supply-side story.
Typically, looking ahead, looking at March, for instance, it's a time of year when many people do start shopping for houses. Are you expecting that to happen, and do you expect more supply to come on at that stage?
I do expect that the usual seasonal pickup to occur in house hunting, and I would also think that more supply will come onto the market this year than was the case last year, because with prices still up around 9% year on year, I would think that more sellers have confidence now to be marketing their properties. It's difficult to know how that supply-demand balance will play out, but I think overall for prices, it wouldn't be surprising to see them stalling out this year compared to the very strong upward momentum last year, which I think probably got some way ahead of the recovery in overall economic conditions, and particularly in household incomes, which are very important for house prices.
What about the regional disparities? I know you don't have a breakdown in your latest report, but anecdotally, what are you seeing?
Anecdotally, we're seeing big strength in London and the southeast. The sort of Midlands and northern regions have seen house prices stabilize and rise slightly, but nothing like to the extent that has been the case in London and the southeast. What
sort of percentages are we talking about there?
Probably in excess of 10%, maybe approaching 15% over the past year.
Annualized, of course, you're talking about there, but that's very quickly.
Annualized,
yeah. Mortgage lenders, very quickly, you seeing more evidence of them lending?
Well, we have seen mortgage rates come down in the last couple of months, and there are more deals available at 90% LTV for first-time buyers. So I would say credit is probably more available than it was this time last year, probably slowly becoming more and more available, but not, returning to the levels of availability that we saw in 2006 and 2007 when there was a lot of exuberance in the market. And I don't think we're returning to that stage anytime soon.
Martin, thank you so much for joining us. Martin Gahbauer, that's chief economist at Nationwide.